Hi, good evening, everyone. Thank you for joining us today. We warmly welcome you all to the KPMG webinar on tax planning for individuals based on the recent tax reforms organized by the KPMG Academy. I have here with us our presenters and the panelists. A very big thank you for all of you for joining us as well, taking time off from your busy schedules. So the panelists for the day, before I introduce the presenter who will be taking over from me in a few minutes. The panelist for the day is Mr. Nandika Buddhipala, the Chief Financial Officer of Commercial Bank. Thank you, sir, for joining us. And we also have Ms. Dilani Katapayarachi, Vice President, 8th Spence Corporate Finance Private Limited. Thanks, Dilani, for joining us. Let us now move in to the presentation, which will be presented by Mr. Suresh Pereira, Principal Tax and Regulatory of KPMG. There are so many tax reforms in the recent months. So what we intend, or what our objective of this is, try as much as possible within this time frame to bring to you the most important or the key significant changes which will impact your individual taxes. So without any further delay, let me invite Mr. Suresh Pereira to take over with his presentation. And soon after the presentation, we will move into a panel session, which will include discussions, and we will also take up your questions. As you know, we are live on YouTube right now, so you will be watching us. A lot of you will be watching us now. Please do make comments, put your questions as comments, and we'll try best to accommodate those in the panel session. Over to you, Suresh. Thank you. Just give us a few moments till Suresh opens up his presentation.
Good afternoon, everybody. It is Albert Einstein who said that the hardest thing in the world to understand is income tax. We hope this presentation will give you some information to understand the intricacies involved with regard to the recent changes that we have witnessed in the Sri Lankan income tax regime. Right, before I start, let me say that this webinar is conducted based on the web notices issued by the Department of Inland Revenue, and some of these require legislative enactment and some do not. Right, so what's the scope? When you say individuals, there are individuals who are in employment and there are individuals who are in self-employment. Then there are residents and there are non-residents, and all have been impacted because of this series of changes that have been introduced. Well, in relation to the taxes, ESC and NBT, nation building tax, have been administratively abolished, and those are some of the taxes. NBT may have been a tax that would have impacted many of you all. Okay, in relation to VAT, now going forward, because of the increase of the threshold from 1st of January, only if a person has more than 25 million per month would have to worry about VAT. If that is not the case, then the person need not worry about VAT also. So the bulk of our presentation is basically going to be in relation to income tax. Right. Why are we talking about income tax right now? It's a hot topic. The reason is because a certain category of individuals, that means the individuals who are in employment, have been impacted with regard to the way they should pay the income taxes. So right now, why this area has become a hot topic is because of that. But at the same time, we have to keep in mind there are many other changes that have taken place, and that actually is beneficial to the employees, all employees as well as the individuals. Now, before going into the hot topic, let me refresh the memories. There has been an increase of the threshold. Earlier, in relation to an employee, an employee had up to 1.2 million or 100,000 a month was the threshold. And in relation to self-employed, there was a 5 lakh threshold. Now, so what has happened here is that threshold has increased, and there are slab changes as well as the rate changes. So because of that, all individuals, almost all the individuals do benefit. But because of the procedural changes that have been introduced in relation to the payment of employment taxes, we are right now a little bit confused, right? Rate reduction. Now, I want to explain the impact of this on the individuals, specifically with regard to the employees. Now, earlier, a person who had a salary of 225,000 a month paid 9,000 rupees as tax. And with the change, that person is not going to be liable for tax. Now, take a look at the next row. A person who has a person who is deriving 275,000 a month earlier paid 16,000 as taxes for a month, and that now gets reduced to 1,500 rupees a month. And earlier, the person paid 5.8% of the salary as taxes. Now it has reduced to just 0.6%. So a person who had a 5 lakh salary, you can see, earlier paid 66,000 as taxes, and now only 15,000. So you can see everybody has benefited, not only the people with middle income, but even when you go to the top bracket, a person who derived the salary of 2 million earlier paid almost 4.5 lakhs, 460,000 as taxes. And now that has got reduced to just 270,000. So earlier the person paid almost 21% of the salary as income taxes, and now it has reduced just to 13.5% of the salary as income tax. Right, now what are these notices that I mentioned earlier? Well, there's been a plethora of notices that has been issued, but for our discussion, there are 3 notices that are relevant. The notice issued on the 8th of April and the 15th of April and the 20th April. Actually, this gives in a nutshell, or it summarizes almost all the changes that have been introduced in relation to the employment income, taxation of employment income. Right, so before we go any further, let's get an idea with regard to the key changes that have been introduced by these notices. Well, PAYE taxes have been removed. The terminology PAYE tax has been mentioned, and PAYE tax has been removed with effect from 1st of January. Now you have to be mindful when you are computing a tax liability as to how we are going to compute your liability. First 9 months and this next 3 months. And the same notice has introduced what is called APIT, again a terminology, a label, advanced personal income tax. And the notice says it has been introduced with effect from 1st of April. So that means from the commencement of the year of assessment 2021. And there is a option given to the employees, resident employees, with regard to the how to account for the income taxes. There is an option given. Either you can request the employer to deduct the taxes and pay, or you can decide to pay on your own. And there's a new qualifying payment reliefs that has been introduced up to 2 million. Now that is actually a very welcome change, and we will look at that later in detail. And irrespective of the choice, if a resident employee, a person who is working in a company or working for an employer, derives more than 250,000 a month, must file income tax returns, irrespective of whether the person gives the consent to the employer to deduct the taxes or not. Now, that's a key thing that we have to keep in mind. So, right, let's have a look at the PAYE removal. Employers allowed to make tax payment under the PAYE scheme with consent of the employee. Now, we have to understand this two stages. We have, with regard to the employment taxes, there are two stages we have to understand how it operates. January, February, March is one stage, and the department has given certain instructions, and the stage thereafter, that is commencing from 1/4/2020. So the notice simply says, maybe you can deduct from the remuneration or recover it from by any other manner. And it also says the employer must remit the pay deducted to the Commissioner General, to that the Inland Revenue Department, on or before the 15th May 2020, and accommodate that in the PAYE annual statement for the 1920 also. It was, according to the normal law, it's due on the 30th April, but it has been extended to 31st 2020 now. Right, now we need to understand with regard to this issue pertaining to the first 3 months, January, February, March. Now what has happened? On one hand, we heard the pay taxes has been abolished with effect from 1/1/2020. And then again, there's another statement. If the employer gives the consent, the employer can deduct the taxes or account for the taxes to the Commissioner General. So how do you understand? Now, I'm trying to explain this short period, what exactly is the mechanism or the impact or the legal impact. However, considering, just have a look at this phrase in the second para. However, considering the inconvenience faced by the employee in making their tax payment. So there is an important phrase, inconvenience faced by the employee in making their tax payment. So just keep that phrase in mind when I'm explaining this, right? So here what is happening is pay taxes have not been reintroduced. Pay taxes have not been reintroduced. What the Commissioner General is saying is, as a assistance, as a help to the employees, as well as for the smooth administration of the Inland Revenue Department, employer can, with the consent of the employee, pay off the taxes of the employee on or before 15th May to the Commissioner General. And CGR seems to be saying, the Commissioner General seems to be saying that if you do that, then we will accommodate it under the PAYE system. And then have an arrangement between the two parties. That means the employer and the employee to recover it, maybe from remuneration or any other arrangement. So that's what the exact status. No pay taxes have been reintroduced with regard to the first 3 months, January, February, March. Right. So first thing is, if you're an employee, when you're trying to give the consent, you have a question mark, whether I should give the consent or not. Right. The things that you should keep in mind when you are trying to take that decision. Well, there is a new qualifying payment relief up to 1.2 million that I mentioned. So with regard to the first 3 months, you will not get the entire 1.2 million. It will be hopefully, I think it will be a pro rata amount that the department will extend. That means 3 lakhs. And if you decide to pay on, if you request the Commissioner General to pay the taxes on your behalf, then your option is to, if you have qualifying payment reliefs, when you're filing the return, expect a refund. But on the other hand, if you are paying it on your own on the 15th May, you have the option to deduct the amount from the taxes and pay a reduced amount as income tax, provided you have those qualifying payment relief that we'll be looking at. So you have to take into consideration the time value of money. How important is that? Also, what you have to keep in mind, again, I repeat, whether you give the consent or no consent, still you have to open an income tax file and file the return. So on self-assessment basis, you have to pay taxes also on the 15th May if you have other income like interest income. In case of an employer, there's a specific tax table for 3 months that have been issued by the Inland Revenue Department, and it's important that it's mandatory that you have to get the consent from the employee to get a deduction. That is what the notice says, and must also submit the pay returns for the 1920. So what are these qualifying payment reliefs? Now you can see there is a health expenditure mentioned, educational expenditure, housing loan interest, and contribution to approved pension scheme, and also expenditure in relation to purchase of equity or security. Right, I'll start from the bottom. In relation to expenditure incurred for purchase of equity means the investment income. So you're being given a deduction for the investment income, the amount, the purchase consideration for the equity or the security. You are being given a tax deduction. And housing loan interest is something that was there earlier before 2011, and it has been reintroduced, and I think it's a very important move. And with regard to educational expenses, there's a specific reference to local expenditure, and with regard to health expenditure, it also covers contributions to medical insurance. That's what the notice says. Now, there are certain, this is basically the content in the web notice, not the law. So this is open for interpretation, as well as how this will get legislated will play a big role, and we have to keep our fingers crossed with regard to how to look into this when you are trying to get the advantage with regard to the QP deduction, how to handle that. So this is available, you have to keep in mind, from 1st of January. Right. So now let's analyze this now. When you say health expenditure, what will come under that? Will that cover fees paid to the doctors? The answer seems to be from the Inland Department, yes. And fees paid to the hospital, again, the answers from the Inland Department seems to be yes. And the lab reports, again, the answer from the Inland Department is yes with regard to the first 3 bullet points. Okay, I also asked the question whether gym membership, that is also expenditure that we incur to maintain our health, whether that will be given as a deduction, and the answer that I have received is no. With regard to food supplements also, answer seems to be, answer is no, right? So the important point is, with regard to this, I think when the law is being drafted, there should be proper definitions, as well as more clarity from the Inland Department actually is helpful in practice when we are trying to comply by just looking at the web notice. Right, when it comes to education, right, what is the scope of this one now? Educational expenditure incurred locally for the same individual or for the children. Tuition fees to an institution in Sri Lanka, yes, will be given as a deduction. It's a QP deduction. And in relation to a foreign exam, okay, you are paying the exam fees as well as subscription. Now, that may not be given as a deduction, that may not be accommodated within this QP relief scheme. But tuition fees paid to the local institute to follow classes, that may be given as a deduction. Right. Another clarity that we need is the word used in the press notice is children. Who is a child? Now, if the father is expending money to educate his son, 23-year-old son, or maybe 25-year-old son, do we use the word child to describe a person like that? But the rationale here is basically to give relief to expenditure incurred in relation to educating, and I think Inland Revenue Department should allow that as a policy. And this is where basically we have seen where the policymakers come up with very beneficial policies, but then we find Inland Revenue Department thereafter, when it comes to interpretation takes a very narrow view and try to cut down the deduction. And we have seen this in the past with regard to many other legislative provisions as well. So all of us believe basically we need intervention of the policymakers to ensure that there is no dilution of the benefit given by the policymakers because of the actions of the or the narrow interpretations of the assessors or the commissioners of the Inland Revenue Department. So what is educational expenses? Definitely a definition should be included, and there should be a definition to the word child and what is meant by incurred locally. So we need clarity, and again, as I mentioned, before this gets legislated, that should be resolved. Right. January to March. Now I mentioned how to calculate, and we do have tables being issued by the Inland Revenue Department, the notice. And we see the distinction that has been there already. That's the primary employment and the secondary employment, the terminology. And in relation to primary employment, the table 1 captures the regular profits from employment and the lump sum payments. Now, lump sum payments are captured under table 1 in relation to the first 3 months. But when it comes to the second year, the second stage, that means the period commencing from 1st of April 2020, lump sum payments go into the table 2. So that's a point that you need to keep in mind. Table 2 is in relation to tax on tax. That means basically where the employer is bearing the taxes of the employee. There's another table that should be used to calculate the liability. In relation to secondary employment, earlier when the 15th April notice was issued, there was no reference there. It was silent, but subsequently Department of Inland Revenue, without changing the date of the notice, has included and addressed this issue with regard to the secondary employment, how to handle during the first 3 months also. So that's table 3 and table 4 introduced in relation to that. So this notice, you can see, I have given the link here. In the link, you get the full notice, the full tables there. Right, the table 1, just have a quick look at this. On the left-hand side, you find the cumulative profits from employment for the January, February, March. So up to 750,000, that means the salaries of the 3 months is exempt. If it is below the 307, if it is below 750,000, then it is exempt. If it is between 750,000 and 1.5 million, there is 6% rate, and there is a normal calculation table methodology that has been used. Right, I won't go into detail. So the rates are basically 6%, 12%, and 18%, and the slabs keep changing. 750 slabs. Right. In relation to the employees who have not given the consent for the company to pay off the liability, then what are the obligations that category has to be mindful of? Well, first, you have to compute your tax liability. It's a tricky thing. And open the tax file. And we also have this thing called the statement of estimated taxes. That statement is not required in relation to year of assessment 1920, but it will be applicable from 2021. So this is some point that again you have to keep in mind when you're going to decide to go on your own. Right. Now we have to see in the law, when you look at the Inland Revenue Act, as you all know, basically your next payment, the immediate payment is in another 15 days on the 15th of May in relation to the taxes of the January, February, March. And you can see in the law, there is a provision to ask for an extension of payment. So you have to keep in mind, you have a legal provision in the new Inland Revenue Act to request for a deferment of the payment. Commission General can consider your request and make that payment. But what you have to keep in mind is, if an extension is granted, that does not mean the interest on that will not be chargeable. Under the Act, there is a concept of penalty as well as interest in relation to the delayed payments. The penalty may get waived off, but not the interest according to the law. And you need to file your 1920 return. The due date for that is the 30th November. Right, now let's move on to the web notice, the 8th April web notice, and this is the web notice that has introduced this concept called APIT, Advanced Personal Income Tax, and AIT. So what are the things in that in a nutshell? And again, it goes on to reiterate that withholding tax for residents are removed with effect from 1st of January 2020. But in relation to non-residents, no impact, the withholding continues. This WHT removal is only in relation to the residents. Introduction of APIT and advanced income tax is with effect from 1st of April 2020. So what is APIT? APIT is basically in relation to the employment income. What is the AIT? AIT is in relation to the, let's say, investment income. And there is a new thing that has been stipulated in this document, that is, if the payment is in the nature of a regular fixed payment, then you have the opportunity to ask the person who is making the payment to deduct the taxes and give you the balance. But in relation to this, still the scheme has not been finalized and no guideline has been issued so far. And my understanding is the Department of Inland Revenue is also waiting instructions from the Ministry of Finance in relation to the AIT. Right, so here the employee must make a request for the reduction and income to be included in the return of income. And so what happens is the employee deducts when you're filing the return in relation to both advanced personal income tax as well as in relation to the advanced income tax, you are entitled to get the credit for the taxes deducted by the person making the payment. Right, let's have a look at the APIT in detail. So, okay, in relation to year of assessment 2020, the concept of the word or this concept of terminology is applicable from 1st of April only for the year of assessment 2020. Right, now there is a how do I say big legal interpretation with regard to this application or the interpretation, the introduction of this this concept of APIT. Now, if you look at the Inland Revenue Act, it's a section 83 that governs the concept of deduction of taxes from the employment income. And the phrase used in that is very important. It says the Commissioner General must specify the circumstances under which the employer should deduct taxes. Whereas under the old regime, Inland Revenue Act 2006 and the Inland Revenue Act 2000 and the act that was before that, the obligation casted on the employer, the company, to deduct taxes was absolute. And it was statutorily there in the section. But here, the liability of the employer to deduct taxes commences only upon the Commissioner General specifying the circumstances. Now, so this web notice that has been issued, we have to consider as the notice issued under section 83. Now, when you look at that wording, the issue is, it uses the word consent of the employee. So is the consent of the employee alone is enough? For instance, employee is saying, okay, deduct my taxes. But the company is saying, no, you go ahead and pay your own taxes. Can that take place? So it depends according to the interpretation of the circumstances specified by the Commissioner General. Now, this also, I think, again, I had a chat with the Inland Department also. Still, they are also not very much clear on this point. There are two options, two ways of interpreting this. One is basically only the consent of the employee or the deduction of the employee is relevant. Moment the employee stipulates deduct my taxes, then the company should deduct. And if the company fails to deduct, then the penal provisions may be applicable. The other way is, okay, the way the circumstances have been specified by the Commissioner General requires both employer and employee to come to a mutual agreement and then do the deduction. Thereafter only the liability will, absolute liability will come on the employer. And then we can see here also there's a nomenclature, APIT, Advanced Personal Income Tax, that has been introduced. Now, some of us, most of us will be surprised to hear there was nothing called PAYE taxes in the first place. If you look at the earlier, when you look at the earlier Inland Revenue Acts, you can see that PAYE tax is not a word phrase that you will find in any of the Inland Revenue Acts. It is a phrase that has been coined by the previous Commissioner Generals, and that is the same case when it comes to the APIT also. So, Commissioner General is inventing this word APIT, whereas under section 83, Commissioner General's duty to specify the circumstances for deducting the taxes by the employer. And also, you can see rates. Commissioner General has also the power to specify the rates. Now, that comes from the first schedule, para 10. Commissioner General under the Act has the power to specify the rates. So he has the legal power. But the only thing is, you have to keep in mind that he has to specify the rates by way of a gazette and not just by a circular. But you can see from introduction of the new Inland Revenue Act, always the rates have been specified by the Commissioner General using a circular. And then he has also referred to tax tables. He has also issued tax tables. Now, the concept of tax tables was statutorily defined in the old income tax regime. That means the 2006 Act and the acts that were previously there. The concept of tax tables is not referred to under the section 83 under in the new Inland Revenue Act, but as a guideline, the Commissioner General has introduced given tax tables also. So you can take it as to making our job easy or life easy. So, in relation to a resident employee, a person who has more than 250,000 a month has the option to ask the company to deduct the taxes and pay, or he can pay on his own. But if he uses the option and allows the company to deduct, still that does not mean he does not have to file a return. He has to open a income tax file and file the return, even if he does not have any other income. And in relation to the non-residents, as I mentioned earlier, deduction is compulsory. The company must continue to deduct the withholding taxes from the employment income, irrespective of whether the non-resident employee will give the consent or not. His consent is immaterial. So I raised the question. So what is the purpose of this APIT? Advanced Personal Income Tax, the terminology used by the Commissioner General. First, there was an attempt to ensure that everybody will file a return and employer not to deduct. So thereafter, there was lobbying concerns raised by the employees, because under the scheme now, the employees have to file their own returns and the employees have to make payments. So there's a shifting of the burden from the employer to the employee in relation to accounting for the taxes of the employee. So because of the lobbying or the concerns raised, I believe this concept of APIT was introduced. But then what is the purpose? Still, even if the company deducts your income taxes, still you have to open the file and file your return. So I have to raise the question, what is the purpose of the APIT? I'm not sure whether the APIT is meeting the expectation of the employees who lobbied to restore the status quo. Right, so what are the other obligations? Now let's see. The concept of primary employment declaration continues. So what is primary employment declaration? This is basically if a person is having two jobs, the person should select one as the primary employer and make a declaration. So if the person's income is over 250,000 a month or 3 million for a year, the person must make a primary employment declaration, and it must be signed and dated by the employee and the employer. Now I underline this word employee and the employer. Now this is where the issue crops up. So what the Department of Inland Revenue has done is, into this primary employment declaration, the provision for obtaining the consent is also included. So because of the conditions that are there in respect to the primary employment, those conditions become applicable in relation to the consent also. Now the last bullet point, withdrawals allows only at the end of the year of assessment. Now that is in relation to the primary employment declaration. Once a person gives the primary employment declaration to an employee, that cannot be withdrawn only at the end of the year of assessment. In the middle of the year, that cannot be withdrawn. So it can be withdrawn in the middle of the year only if the primary employment is ceased. If the primary employment declaration is not given, then the employer must consider that as the secondary employment. Now, the point is, since these two are married, the concept, that is the consent to be given with regard to the taxes to be paid by the company as well as the primary employment, and since the primary employment declaration cannot be withdrawn halfway through, it seems the department is inferring, once you opt to give the right to the company to deduct taxes, that cannot also be halfway stopped. You have to wait till the end of the year. Now, all these are basically mechanisms introduced by the Commissioner General, and I have to say that in the Act, there's only one statutory section, Section 83, that Parliament has got involved in relation to the deduction of taxes from the employment income. With regard to reduction of employment income, with regard to reduction of withholding taxes from the employment income, there is much discretion to the Commissioner General as to the mechanisms to be introduced. So you can see the primary employment declaration, the form I have included it. So the point number 2, that's the one that I referred to. Now, the document that is meant to indicate this is my primary employment has been married with the consent also. When you're furnishing the primary employment, you must also furnish your decision also. I agree or I do not agree to deduct the advance personal income tax from my remuneration for every year of assessment commencing from 1/4/2020 until such time it's withdrawn, right? Sorry. So in addition to the primary employment declaration, now the department has also included a secondary employment declaration also. Now earlier there was only primary employment declaration. There was no secondary employment declaration. Now this second document has also been introduced. Now this is very interesting. This document is very, very interesting. So you can see when you are giving the this document to the second employer, you have to disclose your income from the primary employment. Why? Because according to the way the tables have been, the mechanism has been devised, there are 3 rates that the employer can use in relation to reduction of the withholding taxes from the secondary employment income, and that is now married to your primary employment income. So that means you have to disclose your primary employment income to the second employer. So some of us may have an issue with regard to the confidentiality of our personal income. Right, what are the points to note now? If the second employee is to be directed for the deduction, disclosure of the primary employment income is mandatory. Now this is what I mentioned earlier. If you have 2 jobs and you want the second employer to deduct the taxes from you, you need to tell your first employer the salary that you are receiving from the first employer. And also you have to keep in mind, you have the freedom to you have the option of basically saying to the primary employer, deduct my taxes, but you will not give that mandate to the secondary employment. So primary employment will, the salary from the primary employment will come minus the taxes, but the secondary employment, the salary from the secondary employment, you can get into your hand in full, or the other way about it. Okay, so as per the department's intimation, though the date of the commencement of the consent direction is flexible, withdrawal is only at the expiry of the year of assessment. So the withdrawal aspect is what I explained earlier. Now let me speak a little bit in relation to the date of commencement of the consent. Now this APIT commences from 1st of April, but Department of Inland Revenue, the way this has been worded, you don't have to give the consent in April or in month of May or in July. You can decide the time at which you give the consent. Date of commencement of the consent is flexible. That seems to be the scheme. Right, so revised tax tables. This is earlier also we had the tax tables, and now also we have the tax tables being introduced. So tab table number 1 with regard to the furnishing of the tab table number 1 is applicable where the employee has furnished the primary employer declaration, regular payments, regular profits from employment. The table 2 with regard to lump sum payments. Now this is where the bonus, right? And in table number 3 is in relation to once and for all payments. That means the terminal benefits. And with regard to terminal benefits, there is no requirement to get the consent of the employee. Company must deduct taxes. Payments to non-citizens and non-residents are covered in table number 4 and table number 5, table number 6, and table number 7 is the secondary employment remuneration table that we discussed. Now, I'm just giving you an idea with regard to 2 of the tables. Table number 1, you can see the slabs, 250,000. First 250,000 is not liable, and it keeps changing. The slabs keep changing in 250,000 slabs, and the rates keep going in 6% increases, 6, 12, and 18. And this is only for the first 3 months, right? sorry, not first 3 months. This is basically for the entire. Then table number 2, lump sum payments applied for deducting tax on lump sum payments, bonuses received or derived. Cumulative income expected for the year of assessment to be calculated, including the bonus payment applied to identify tax payable on bonuses. Right. So this table is also in practice important for us. Terminal benefits are covered under table 3. As I mentioned, the consent of the employee is not relevant. The company must deduct taxes from the terminal benefits and must hold on to the tax for a period of 90 days. And employee must approach the Inland Revenue Department and within a period of 90 days must get the direction. And if there's no direction, then the company has the obligation to remit the money after the expiry of the 90-day period. In relation to non-residents and non-citizens, a non-resident / non-citizen. Now, who is this? This is basically a person who is not a citizen as well as a non-resident. So both criteria should be fulfilled. And if that's the case, that person is not is entitled for the 3 million qualifying payment relief that all of us enjoy. And the taxes must be calculated in accordance with the table 4. Right. I'm just trying to give you an idea with regard to the second table that I mentioned. That's the table number 7, secondary employment. So now here you can see earlier, before going to the purple page, you can look at what I've put down at the bottom. Earlier, with regard to secondary employment, the mechanism was if the salary from the payment from the secondary employment was below 50,000 a month, flat rate of 5%. If the salary level was the payment was above 50,000 a month, flat rate of 10%. So it was easy. But here now what we see is there are 3 rates and the company, the second employer has to make a call whether to deduct 6%, 12% or 18%. How does the second employer decide that? That is by looking at the monthly profits from the primary employer. Now that is why I mentioned earlier there's a requirement now for the employee to inform his salary from the first employer, primary employer, to the secondary employer. So depending on that primary employment income, whether 6% or 12% or 18% would be the WH to be deducted by the second employer. So you can see there's a issue with regard to the disclosure of your primary employment income to the secondary employer. Right. So what are the if you don't now this guideline index to the APIT guideline specifically says that with non-payment to the Commissioner General, there is a penalty of 20% tax. There's a 20% penalty. Now, how this will work in practice, how the surgeries will be carried out to the Inland Revenue Department to accommodate this thing, we need to keep our fingers crossed because the mechanism in the new act is different. And there's a reference to interest payment of 1.5% per month also mentioned in the guideline issued by the Inland Revenue Department. So if the tax is not paid on the due date, there's 1.5% per month interest to be charged. Right. Let's look at individuals. So this applies to both self-employed as well as the employees who are in employment. So you can see there's a QP relief, qualifying payment relief of 3 million, and the basic table that is applicable. First 3 million goes at 6%, second 3 million at 12%, and the balance at 18%, the basic. But if the person is engaged in the business, an individual is engaged in the business of betting and gaming, liquor, tobacco, that's his activity, then the applicable rate is 40%, not 6, 12, and 18. Right. Now, this slide gives you an idea with regard to who are filing income tax returns, or everyone will be filing income tax returns if you're above 250,000. What are the reliefs and exemptions that are available? So we get a 3 million qualifying payment relief, and up to 1.2 million also there's a new qualifying payment relief that we looked at in relation to the specified expenses, that is the education, health, etc. And if you own an apartment or a house, you are also entitled, and you put it on lease, then you are also entitled to 25% of the rental income for repair and maintenance with regard to the rental due for the year. 25% of that you are entitled to get a reduction for. In addition to that, if you are a foreign currency earner, there is a exemption also introduced now. The only criteria is the service must be utilized outside Sri Lanka, and the foreign currency must be remitted to Sri Lanka through a bank. So there is no ceiling here. Earlier, there was a ceiling of 15 million. Now that ceiling has been taken out. And you have to keep in mind, this is applicable from 1st of January 2020. So when you are trying to file the, do the computation, you need to take into consideration this also, very useful one. Right, let's have a look at advanced income tax. So first, all the withholding taxes applicable on dividend, interest, discount, charge, natural resource payments, rent, royalty, premium, retirement payment, as well as 5% WHT that was there on service performers was taken out. But with effect from April, there is a scheme called advance income tax that has been introduced. That is basically where the person who is getting the payment can request the person who is making the payment to deduct the taxes. But at what rate is not specified. The guideline is awaited, and my understanding is still this scheme is being discussed between the Ministry of Finance and the Inland Revenue Department. So a separate guideline will be issued. Right. Let's have a look at dividends also before I I'm coming to an end of my presentation. The dividends. What are the important rules that we have to keep in mind? There was due to the abolition of the final withholding status of the 14%. Earlier, dividends was liable for 14% withholding tax, and because of that abolition, there will be people who are gaining as well as people who are losing out. And in relation to the, so the new tax brackets are now 6, 12, and 18. A person who received, a person who is in the tax bracket of 6%, if he receives, if he had, the person who is in the bracket of 66%, now can get the dividend without a tax reduction and pay taxes at the rate of 6%. So you have the benefit of basically regulating the liability or aligning the liability on the dividends to your tax bracket. In relation to the non-residents, the dividends are tax-free. That's something you have to keep in mind. And when it comes to interest, again, you have to keep in mind, non-residents, the interest on foreign loans are tax-free. And earlier there was a 5% withholdings tax on interest, and that has been taken out. And because of that, also, you can see people with annual income of less than 3 million gets a advantage, can get advantage. And but at the same time, earlier when it was a final tax, everybody paid taxes on interest only at the rate of 5%, but now that will not be the situation. You will be exposed to income tax on the interest depending on your tax bracket. Now this scheme, again, we have to wait and see how this will get finalized. As I mentioned earlier, still this AIT scheme is being negotiated. So what are the AIT rates to be used, etc. We need to wait and see. Right, now how do we plan our taxes? It's like basically playing chess. In order to become a good chess player, or in order to play chess properly, you need to know your basic rules, basic tax rules. How to advance a pawn, it's only one square at a time. If it is a bishop, it's always diagonal. So you have to know your basic rules. At the same time, you need, if you want to be a good player, then you need to know your advanced techniques also, King's Gambit or the Queen's Gambit or whatever. So when it comes to tax planning also, it's the same. First, you need to know your rules, tax rules. And you also have to get an idea with regard to the techniques that are there for planning the taxes. And most importantly, even you're playing chess, you need to know how the mind of your opponent is functioning. Same applies when you're doing your planning your taxes also. You need to expect, you have to understand the thinking of the Inland Revenue Department also. So what are things that we can, some simple things that we can look at? I mentioned with regard to the current situation, you can consider deferment of your payments. There's a provision in the law to request for extension. But when you are doing that thing, first you need to do a comparison of the interest cost that has to be paid. I mentioned earlier, penalty will be waived out, but not the interest, as opposed to so the interest cost must be weighed against your opportunity cost. At the same time, if you request the company to deduct APIT, then it's going to be a monthly deduction. Whereas if you decide to pay on your own, it's going to be a quarterly payment, so time value of the money. And also, only in relation to the 1920, be mindful with regard to the 9/3 split. That means the first 9 months we had one income tax regime, and with regard to the next 3 months we have different rules, not income tax regime, different rules. So how to use these rules? Then also there's something very interesting, a term called regular profits from employment. In section 83, the phrase is not regular profits from employment, it's payments to the employee that goes into his taxable income. But when it comes to the guidelines issued by the Inland Revenue Department for the application of the table 1, it's the regular profits from employment that is being used. So a lot of interpretation issues are possible within that. Then how to use the qualifying payment reliefs, we looked at them, and also how to use the ESC credits available. ESC was abolished earlier. Administratively, it has been abolished, but still, if you have brought forward ESC credits, that can be used, and how best it is to be used. And if you have refunds, how to use the finalized income tax refunds and notional tax credits, how to use these things. These are some of the planning points that we have to keep in mind. Right, so what are the techniques? When you are basically into tax planning, there are standard techniques. Year-end tax planning, mid-year tax planning, restructuring compensation packages, and how to use the trusts, tax-efficient investments, and debt equity switch. Again, another important technique that we may can consider because of the current rule changes. Right, so those are some of the tax planning techniques that we have to use. So when you are planning your taxes, be mindful. You need to know your rules, and at the same time, you can plan your taxes also. Right, so that brings me to my end of my presentation, and now we shall move to the panel discussion. Rivka, over to you.
Thank you, Suresh. Thank you so much. Wonderful presentation, a lot of information. I know you had a lot more to say, but we are stuck for time. But let me move into the panel session. And let me start off with Dilani. Dilani, you may know now Suresh spoke of the first 3 months deduction and then about the APIT, which is for 2021. Now, in relation to the first 3 months deduction, when the notification was issued, it referred to either deducting from the remuneration or any other arrangement. Now, how did your company, or in your experience, how was this handled by many of the companies? What exactly was these alternative arrangement options that would be available from a commercial sector perspective?
Thank you, Rifka. On this matter, actually, there were a few issues I think corporates had. One was that the press release or the notice or the web notice was issued, I think, somewhere around the 17th of April, although it was dated on the 15th of April. So what happened was that some of the companies had already paid the April remuneration because of the Sinhala New Year. So when the press notice had been issued, although they said to either make arrangements from the monthly salary of the April salary or to make other arrangements, most corporates found it difficult to adhere to. And on top of that, in this situation, basically the Inland Revenue Notice said deduct for 3 months plus the month of April as APIT. So you're asking the employer to deduct 4 months taxes from 1 month's salary. In certain cases, what happened was their salary take-home pay was less than 40%. Because if there were any loans or any other deductions, most corporates couldn't adhere to that regulation. So we have given the option to the employee to open a tax file and remit the taxes by the 15th of May, as there was no option for the corporate to pay the taxes on the due dates. And another thing that needs to be considered is all these notices were issued during a lockdown. And even for a corporate to make other arrangements where you say to the employee, you advance the money to the company and we would pay on behalf of you, was not an option that we could consider, because 80% of the Sri Lankan population still does not have online banking. So all of a sudden, overnight, for us to get in touch with all our employees who are getting about 250,000 and asking them to advance the money to pay their taxes was was very tough for a corporate. So most corporates, I think, from Jan to March, gave the option to the employee to remit the taxes direct. And from 1st April onwards, they basically said, if you all give the consent, the corporate would deduct and remit it on a monthly basis. So I think the Inland Revenue also needs to be a little bit more concerned when they issue press notices giving 2-3 days notice, because it's very difficult, and especially if you have 200-300 employees, it becomes a challenge for a corporate or a company to adhere to the changes.
Right. Yes, true. Thanks, Dilani. Let me just move on to Mr. Buddhipala now. What are your thoughts on it? And especially, I think some of these circulars or web notices have been issued time to time. And like Dilani said, maybe even on the days of the salary being transferred. Your thoughts and how you managed it, Mr. Buddhipala?
I think what she had just mentioned, Rika, is quite appropriate, and that's what happened. And specifically when during the time of lockdown, when the communications are very much restricted, and sometimes when you look at banking environment, the people are still working under the curfew kind of situations, and then they are concentrating on their workload as well as other things with very restrictive amount of resources also. So it has become so cumbersome, and we were not kind of able to grapple with the situation pretty much. That's the kind of thing that finally resulted from our end also. There again, as what she correctly mentioned, there again, when it comes to 4 months deduction, I'm not basically speaking only on behalf of the bank itself, but it's going to be sometimes a bit difficult for all the employees. Like if you have 4,000, 5,000 staff, then it's going to be really, really tough for us to get manually intervene to it. Earlier, it's if the systems are in place, if the communications are in place, if the communications are coming through on time. This is not like that. So what happened, suddenly some of the regulations and the things came, and you need to reinvent entire wheel. So during lockdown kind of time, it has become extremely difficult. So basically, I really confirm to what you just mentioned.
Okay, thank you, Mr. Bodhipala. I think before I ask any further question from the panelists, I would like to ask Suresh one question in relation to the web notices that has been issued by the Commissioner General. As you know, these are all notices uploaded in the Inland Revenue website. What is the legality of these notifications, Suresh?
Commissioner General has the power to communicate electronically as well as basically publish notices in the website, and that is addressed in the Inland Revenue Act itself. So it is legal.
All right, okay. Suresh, I think there are a lot of questions coming in on the YouTube as well. And one of, I think, the key concerns was in relation to year of assessment 1920, where the 3 months salary has been paid under the pay scheme. They would like to know whether a return is required to be filed for the year of assessment 1920, and whether it will be a annual return or would it be a portion for 3 months. Suresh?
Okay, before I go to that question, Rivka, I just want to add to my previous one. Now, basically, the Commission General has the power to issue web notices. I'm not referring to the content they are in, right? Some of those basically require legal amendments. That's a different issue, but the concept of web notices is valid, right? The question there is in relation to 3 months and 9 months, whether the person has to file the income tax return. Yes, you have to file the income tax return with regard to 3 months also, irrespective of whether you require the company to deduct or not.
Okay. All right. Let me just move into another question to Mr. Bodhipala. I think most of the organizations and especially banks were relieved when the withholding tax was removed from interest because the administrative hassle. Now, with a nomenclature change, a terminology change in the form of either advance payment of income tax on employment income or advance income tax, a deduction it has been introduced. So, which means a withholding agent role has to be carried out again. What are your thoughts on this?
Maybe I will take it in a bit broader perspective. Now, when we look at it, yes, the burden-wise, definitely the same burden is going to coming back to the banking sector as far as the withholding agent kind of role. All these issues are there. Maybe the flip side of it is going to be, I think, the latter part of the presentation, where it is very well mentioned and very well rooted into the tax planning aspects. And I think that's where it is coming from. There again, when you have maybe 14% kind of final tax for the dividends and then 5% tax for the something else, and then you have the final tax payment irrespective of your income. So then when it comes to as a part of your income, as well as having some qualifying payment up to the level of 1.2 million, then it gives you kind of a limited opportunity. I'm not going to say that you have wide opportunity of tax planning, but earlier the circumstances, you really don't have any kind of maybe room for you to have some kind of tax planning. So the final tax is going to be that withholding amount, and then in the hands of the people who are going to run your income, maybe it can be the only fixed income earner, but there again, there are other subsidiary things that you need to think of. Maybe even though it's going to be a burden, yes, the former system, of course, the people were familiar and we had some amount of understanding about it, and we got used to it, and all the comfort is there. But I think in the hands of the individual, this particular scheme is giving some amount of room to play. Maybe kind of, yes, as he said correctly, maybe whatever it is, then that amount of room is going to be there. On the top of it, then your taxes are going to be imposed on your total income. So the slabs will be much more clearer than you're just paying withholding tax irrespective of your income bracket.
Okay, thank you, Mr. Dipal. Dilani, your thoughts on that, especially now I think under AIT, even service fees has been included. So if you are making any fixed regular payments, you will have to make a deduction, although the rates have still not been specified. We are still awaiting a gazette. Again, so this is a reintroduction of some of the compliance burden that I think you were relieved of maybe for about a couple of months. Your thoughts on this?
Yes, Rifka, as the reason for withdrawal of withholding tax, as we saw, was to reduce the burden and to ensure that anyone who was getting an income above 250,000 from any source to file in a tax return. And in this situation, reintroducing it as AIT just creates another burden for the company, because they would need to reintroduce into their software. And if the rates are going to vary depending on what the tax rate of the payer is, for example, if a person is at a 6% rate or a 15 or a 18% rate, if the recipient of the income says, okay, please deduct tax at 18%, it just makes it a burdensome operation for corporates. And what is the logic of withdrawing withholding tax and reintroducing it as APIT or AIT is a question that we are asking. Because especially for pay tax, actually it was a system that worked perfectly. There was hardly any issues. The employees are not complaining. The employers are never complaining about it. It worked very well. And when they withdrew that, and they introduced it in the month of Jan, and then re-withdrew. There was a withdrawal, and then they introduced it back in April, saying to deduct for the 4 months. I think there needs to be clear direction. And before a decision is made why you're withdrawing a tax or reintroducing a tax, because all these changes brings about a lot of issues for the taxpayer as well as the recipient of the income or the payer of the income. So I think before the Inland Revenue issues the rates, I think it would be good if they rethink the strategy for AIT especially. Because even with withholding tax that were deducted by banks, if anyone is handling taxes would realize most of the taxpayers were not given the credit. And it has been an issue trying to claim the credit with the Inland Revenue, especially for corporates on withholding tax on interest income.
That's right. Thanks, Dilani. Thank you so much.
Can I add to that?
Yes,
Rifka,
please, sir.
that?
Yes,
Yes.
go ahead.
See, there is this important principle, Adam Smith. The taxes must be collected in the most beneficial manner, in the most convenient manner. Yeah. So now what we find here is, with the introduction of the APIT, all three parties are unhappy. Employee does not get a relief because the employee has to file the return. It has not been taken out. And Dilani is unhappy because the companies also have a more compliance burden. Earlier, basically deduct the taxes from all the employees, but now you have to do pick and choose also. Yeah, more work, more compliance work. And I'm sure the officers at the Inland Revenue Department will also be not very happy, because now there's going to be more tax files to be opened, individual tax files to be opened. But this does not have an impact with regard to the revenue going up. coming from the PAYE taxes. Now, I think Dilani touched on an important point in relation to the interest and the dividends. I also pointed out, because there has been inequity with regard to how the investment income is being taxed as opposed to the how to say, employment income or business income has been taxed. Now, to eradicate that, only I think that, like Dilani said, basically it was introduced, but then it should have been done in a more, there's a point there, but that should have been thought of before handling this.
Okay, Suresh, now let me just take some questions. A lot of questions coming in. I'm just clubbing it under some I'm taking. Under advance payment of income tax, which is applicable from 1/4/2020, there is a requirement for consent. Now, the question to you is, Suresh, is the consent, does it have to be accepted by the employer, or is there a way where an employee can request for it and the employer says, no, I don't want to take this burden? How do you handle such a situation?
So now this is why I said that there's more clarity with regard to this aspect is needed from the Inland Revenue Department. Exactly what are they? What is the circumstance that they are mentioning in that notice? The framework is under Section 83. The Commissioner General must specify the circumstances under which the employer must deduct taxes. So, is it only at the option of the consent or the option of the employee, single party, or is it the mutual consent of the employer and the employee? Because when you look at that document, you can see the primary employment document, both parties must sign.
Exactly.
Yeah, so we need more clarity with regard to this, because this is a very crucial point. Moment the circumstances are fulfilled, there is an legal obligation coming on the employer under Section 83. But the way the specification is worded, there is ambiguity still.
Yeah, and Suresh, I think if I'm not mistaken, in that primary declaration, the notification was only published maybe a couple of days ago, while most of the companies would have processed their salaries already for the month of April, and they would have taken another initiative to get the consent. So how does this work out? Because the declaration actually was issued after the salaries have been deducted. So now are we to go back and get another declaration from those employees? How does it work?
Okay, you are putting a difficult one to me. See, I think to understand this scheme, we need to go to the old Inland Revenue Act also. Under the old Inland Revenue Act, there was an absolute burden on the company to deduct because it was there in the section in the PAYE chapter. Whereas in the new Inland Revenue Act, it's the conditional obligation that is casted on the employer. Moment the condition is fulfilled, then it becomes an absolute obligation. But with regard to the first 3 months, as I mentioned earlier, the Commissioner General who introduced, who specified the circumstances in 2018 in relation to the employer to deduct taxes, he withdrew it with effect from 1st of January. So for the period January, February, March, there was no circumstances specified, right? So that is why I said the confusion with regard to that ambiguity with regard to the wording in that press notice which I pointed out. It only says that as an help or assistance to the employee and also for the smooth administration, make good the tax liability of the employee. Thereafter, make an arrangement between the employer and the employee and recover it. And he has given some suggestions, say maybe remuneration, maybe any other manner. But nowhere he said that it should be deducted from the April salary.
Okay, all right. And I think there are some questions in relation to, again, APIT, if APIT or if the consent has been given and deductions being done, whether whether an income tax return has to be filed due to time factor. Let me answer that. Yes, income tax return has to be filed for 2021 as well. You can get your registration, online registration from the Inland Revenue website. Dilan, can I ask you a question in relation to qualifying payment relief? I will route that question again to Suresh as well, especially in relation to, I think, clarifications. I think health, medical, and so on. There are a lot of clarification. They did introduce under that 1.2 million for purchase of equity and security. Your thoughts or the areas you think that the Inland Revenue Department should clarify in relation to this QP relief?
So in the qualifying payment relief, Rifka, there are a few areas I think Suresh pointed out regarding the education expenditure. Who is a child? Is a child, generally a child is any person who is below the age of 18 that we would take into account. But in this case, would a child who above 25 years be entitled to any expenses that a parent incurs for any type of exam fees locally? Would that be allowed? Then on top of that, the medical bills, there is a little bit of doubt what they mean by medical expenditure or health expenditure. Would the OPD bills be covered? Would the hospitalization bills be covered? And for example, if the expenditure was incurred in 1 month of 300,000, could that be claimed for the first 3 months? Or going forward, even for 2020-21, how would they apply the regulations? I think we need further definitions for the terms that are used. So for equity and securities, is it the investment that you make, or is it the expenditure that you would incur in acquiring that investment? For example, if you have borrowed funds, is it the only interest that would be allowed, or is it the capital investment that you make? So I think we would require a further clarification on this, and it's very essential that we get this clarification within the course of next week, because your final, basically the fourth quarter payment is due on the 15th of May. And if you make an overpayment, then you would need to wait a few years to get the refund as well.
Okay, just to add there, I think the verbal clarification that we have received from an officer of the Inland Revenue Department senior officer is that yes, it's the investment income that will be allowed. So the purchase consideration will be allowed. So what you keep in mind with regard to again 1920, it's only up to 3 lakhs. It's not 1.2 million. But add to this, in order to claim all this QP relief, you need, for the benefit of the viewers, you need to preserve the evidence. That means if the hospital bill, you need to keep the hospital bill in relation to educational expenditure, the receipt must be preserved, because the assessors who are handling your file will request for that.
Okay. Suresh, just I think in relation to some of the exemptions on interest, those exemptions have been, as per the notification, granted with effective from 1/4/2018, which means from the year of assessment 18-19. Now, how can a taxpayer claim those exemptions, especially in relation to interest on sovereign bonds and so on? The exemption is actually provided from 1/4/2018. How can a taxpayer deal with that?
I think it's basically you need clarification from the Inland Revenue Department. Transitional provisions are needed.
Sure. Okay, and then Suresh, another question coming from the audience is in relation to the Provident Fund. Is the Provident Fund can be taken as part of the pension deduction, which is referred to under the qualifying payment? If I'm not mistaken, no. Isn't it, Suresh?
My understanding is the concept of Provident Fund and Pension Fund are two different things, but we have to wait and see how the Department of Inland Revenue will react.
There are also a question, Suresh, in relation to benefits such as transport, housing. Is it considered part of the salary for tax assessment? If I'm not mistaken, there are no changes in the benefit valuation. You would just like to refer to that, Suresh?
Yeah,
This
the
is the
benefit
query.
valuation. Yeah, it's that has not changed, no?
And also there are questions in relation to insurance, again, whether life insurance and critical illness, whether that can be covered under the health expenditure QP.
Okay, again, it's a definition needed for the phrase. So when it's being legislated, the Department of Inland Revenue has to give a definition, but it is important the Inland Revenue Department should come up with a clarity in relation to that. Because this is not law. This is not the law to interpret. This is basically the web notices. What is there in the web notice may change when it gets legislated. So it's the policy that should be clarified, and as a help to the taxpayers, the policy should be published in detail.
Sure. Suresh, one other thing, apparently some have tax files opened, let's say 5-6 years ago, which have been inactive after some time. So the question to you is whether they would need to, can they reactivate the same file numbers, or do they need to get a fresh registration?
Again, it's a issue with regard to the administration, but my understanding is, yes, now many things have changed during the last few years, including the introduction of the RAMIs. So in practice, I believe that they will have to go for a new registration, new number.
And Suresh, if I can add to that, actually there are a few numbers that the Inland Revenue has given where you can actually call them and check if your tax file is active or not.
Okay.
In when they issued the notice on advance payment, online payments, there were a few contact details given. So any person who has had a old tax file, they can call and just check if their file is active.
Yeah, and if I'm not mistaken, I think you need to include your NIC number. And when you include your NIC number to register, if a file number has already been allocated to you, it will say so. So it will not allow you to get another number. So then also you could just go back and clarify from those respective numbers that Dilani mentioned. Okay, let me come back to Dilani. I think we are running out of time. Actually, we want extended time. So I'm just trying to do a close up of this session. If Dilani, now, if I ask you this one question, right now, with APIT and AIT being introduced, and this salary cuts that's going on, I think one of the key concerns a lot of people have said is, shouldn't there be concession being given by the government or by corporates in handling these tax deductions, because it's too much of a burden, especially with the salary cuts. Your thoughts on this in general?
You're putting me in the spot, Rivka. Actually, it's a very difficult question because it's not only the employee that is having a issue with COVID pandemic. It's actually the organizations as well as the country as a whole is having an issue. So if we request the government basically to withdraw all income tax payments or increase the thresholds, we need to ask ourselves actually, how is the government going to spend on the other essential services? So given that the threshold has increased to rupees 250,000 and above, I think given the circumstances, I think we would need to pay our taxes, and that might be the only way that as a country we can go forward.
Okay, thank you, Dilani. Thank you so much. Nandika, if I just ask you in relation to overall, what is the expectation now from the Commissioner General from your perspective? Because like as a bank as well, I think there's a lot of queries that must be coming to you in relation to the interest, the deductions, and so on. What is your expectation from the administrators in relation to clarity, what would your immediate requirement be?
I think some of these gray areas and some of the way that you need to calculate, specifically even the previous question, at the time when there are the salary cuts, then how you need to look at the top line, how you need to calculate entire earnings. If the entire earnings are going to get reduced significantly with the expected salary cut, but there again, nobody would know how long those cuts are going to be as well. Then maybe some amount of clarity. I think there is maybe table 5 or something, if I can remember. If you have variation in your income, then you can wait maybe until certain threshold where you reach 3 million and thereafter start taxing. I'm not suggesting that is the way, but the kind of flexible mechanism, maybe based on certain amount of the entire earnings, then maybe only by looking at the 250,000 or whatever the threshold of monthly. I'm just giving one example like that. You might have to maybe come out with certain other the flexible ways of handling it. Otherwise, it's going to be extremely difficult to these people who are in the bottom of the pyramid, who are not hitting the thresholds because of the tax cuts and other loss of the top line, loss of their income. Maybe certain amount of discussions as soon as this lockdown is over, or maybe even now, through this kind of platforms, I think they need to get on. And Suresh, it's better to initiate that kind of a discussion by giving these kind of the issues, maybe so many issues with the variability in the income levels from the one side, and then other kind of issues. Maybe to get some kind of clarity about it. Of course, they also maybe in a hurry now. So many regulations, so many web notices came through. They are trying to absorb it and put it into paper. And they came up with 5, 6, 7, I think tables. We know that they also went through a lot of hassle because of some of the things coming in, and due to uncertainty, they might need some amount of money, as you correctly said, to the government also. So after looking at all that, I think maybe one of the better thing is to maybe some kind of maybe even closed door kind of conversation with some representatives, specifically the KPMG, and you all can add a lot of value there since you have dealt with a lot of clients like us and everywhere. So that particular conversation, I think, need to start maybe right now rather than waiting for so long.
Thank you so much, sir. Suresh, let me give you the final question. Now that we have discussed a lot of the tax changes, and I think the immediate obligations are coming up, the 1920 obligations and then the 2021 payment obligations. If you could just in brief tell what are the immediate steps that a taxpayer should take very briefly in relation to 1920 or the 2021, the steps that we have to take.
Well, if your monthly salary is below 250,000, then you have nothing to do. But if your monthly salary is above 250,000, then the first act that is expected from you is to basically open an income tax file. And depending on the whether you're given the consent, not given the consent, etc., the payment obligations, there's a payment obligation on the 15th May, you have to keep in mind. As I mentioned, okay, if you're going under the pay on your own scheme, then you can look for a deferment. There's a position in the law, etc.
Okay.
And there's a 15th August, there is a payment date you have to keep in mind, and you have to file the return on the 30th November.
All right. Okay. Thank you, Suresh. I think there's an overwhelming response. We've tried as much as possible to cater to some of the questions. I've clubbed in some of these questions as well. Thank you so much, Suresh. Thank you, Mr. Buddipala. Thanks, Gilani. Thank you so much for joining us at this time. And I think thank you for making this discussion much more fruitful. Your thoughts from the corporate sector was very much helpful. And for all the audience who has joined us, thank you so much. We really do hope that we have clarified a few areas at least, because there are so much of changes. So we've just addressed some of the key things that we think would be valuable to you in the immediate future. So hope you enjoyed the session. We'll meet you. KPMG will meet you with further sessions in relation to different subjects. Thank you so much for joining us. Have a good day.
Thank you,
Okay, thank you,
Rivka.
Rivka.